The objective of this standard, that is leasing, is to prescribe for lessees and lessors the appropriate accounting policies and the disclosure to apply in relation to lease. We are more worried about the tangible assets rather than the intangible part. That's where I'm trying to talk about the copyrights, patents, or all those kind of things will not be covered under the lease factor. Good morning and welcome to the session 6 in Unit 3 in International Financial Reporting Standards, where we are going to speak about the factor called as lease. Now, lease is a very big activity that keeps going on in most of the company. They lease out the assets, they lease out so many other factors. But how do we record the concept of lease? Let's go forward and understand it. Now, the objective of this standard, that is leasing, is to prescribe for lessees and lessors the appropriate accounting policies and the disclosure to apply in relation to lease. So this is a very, very important standard that we are speaking about, which is going to talk about the factors called as the leasing. And this is especially for the lessees and the lessors. Because when you are taking lease or when you are giving it out on lease, what is the contractual agreement? How are you going to recognize the revenue that is going to come out of leasing? All those factors are going to be discussed in this session. Now, moving forward, the standard shall be applied in accounting for all leases other than leases to explore or for the use of minerals, oil, natural gas, and similar non-generative resources, or the licensing agreements such as movies or video recording plays, manuscripts, patents, and copyrights. Now, if you look into this factor altogether, we are more worried about the tangible assets rather than the intangible part. That's where I'm trying to talk about the copyrights, patents, or all those kind of things will not be covered under the lease factor. And similarly, when we are talking about the mining, metallurgy, exploration of gas and other factors, leasing cannot be, this standard cannot be applied to that particular recording. Now, moving further, let's first try to understand the definition here clearly. A lease is an agreement whereby the lessor conveys to the lessee in return for a payment or a series of payments to the right of use of an asset as agreed for the period of time. So, for example, if I am going to lease out my house to a person for a time period of 5 years at the rate of 25 lakhs. So what is going to happen is that I am going to give out my house in for an agreement of 25 lakhs lease for 5 years. So for the period of 5 years, I have already collected the money of 25 lakh rupees from that person to whom I have given lease. So until that time period, I cannot go back and ask him any other money or rent. It has already been taken and there is an agreement signed between the owner, that is the lessor, and the lessee here in terms of taking up the lease agreement. Now, the second thing here is that a finance lease is a lease that transfers substantially all the risk and rewards incidental to the ownership of the asset. Title may or may not be eventually transferred. So, moment a financial lease comes into picture, that means to say that all the risk and rewards incidental ownership of the asset that gets transferred to the ownership of the asset. So that is a financial lease altogether, which means you are taking up the risk and the obligatory factor. Now, it is not mandatory that the title might be changed to your name or not. That is secondary for that. But at the financial lease, you are taking the risk factor into picture. Followed by classification of leases. The classification of leases, once you start seeing here, is something where you have adopted to the standard based on the extent of risk and reward incidental to the ownership of the leased asset with the lessor or the lessee. And this is very, very important for all of us. Why? Because for the lessor or the lessee, as we are speaking here, there is a lot of factors that is involved. What are those factors? Let's first try to understand that clearly. What we are trying to say here is that there are times, there are factors, there are matters that comes into picture where we are going to talk about the extent of risk that is involved in this. Now, the extent of risk to which the rewards and the factors are involved in this is where we are going to record it. What are all the lease factors that are going to come, to what extent we are recording it, to what extent it's going to come into picture. Every single detail is to be recorded in the book of accounts. Followed by the risk includes the possibility from the idle, that is the losses from idle capacity or the technological obsolescence from the variations in return because of the changing economic conditions. So for the changing economic conditions, whatever that is coming into picture, the risk will also include the possibilities of the ideal capacity. How much is the ideal capacity? What is the technological obsolescence here? The variations in return, all those factors will be taken into account primarily. So that is very, very important for each one of us. Followed by the rewards may be represented. Now the rewards are very, very important factor that will be represented by the expectation of profitable operation over the asset's economic life and gain from the appreciation in value realization of the factor. So this is where it becomes a very, very important factor, because rewards may be represented by the expectation of profitable asset value. So because of using that asset, I might gain a profit, I might generate some profit in the long run, but that is not what we can expect it right now. That is not what we can write it down right away and say that, yes sir, I'm going to make a profit or I'm going to make a return. So on the realization of the residual value, we are going to record it to the book of accounts. Followed by leases in the financial statement of the leases. So what happens here is that at the commencement of the lease term, lessee shall recognize the financial leases as assets and liability in the balance sheet equal to the fair value of the leased property, or if on the lower side, that is very, very important, not on the higher side, on the lower side, the present value of minimum lease payments that has to be paid in case of the inception of the lease. So moment I take in charge of the financial lease in my hand, I need to record it in the balance sheet in the form of asset and liability, and we have to write down the fair value at a lower range rather than the higher range. Why? Because that will actually tell us what is the property that is, at the level of inception, how it is going to be recorded, how it is going to be taken into picture. So that is why it is very, very important for all of us in terms of understanding the value, in terms of understanding how it has been done. Moving forward, the discount rate that is used to be in calculating the present value of the minimum lease payments of a rate of interest that is being used, if this is practicable to determine, or else we will go with the lessee's increment. How much the lessee will increment, the borrowing rate shall be used. Now what I try to say here is that at the present rate, we are going to discount the value of that for the minimum lease payment period that is going to be used, or else if you are not comfortable with it, we are not able to go ahead with that, we will go with the lessee's incremental factor. And any initial direct cost of the lessee are directly added to the amount recognized as an asset. So once the amount is recognized as an asset, this will be taken forward. So that is how this is going to come into picture. Now the disclosures. Disclosures are something lessees shall, in addition to meeting of the requirements of the Ind-AS 107 financial instruments, disclosures, make the following disclosures of financial lease. So as per 107, we will be talking about the financial instrument parts altogether, because financial instruments are definitely going to talk about it in different manners and different stand altogether. But look at the disclosure that we are going to have for the financial leases. The first one, for each class of asset, the net carrying amount at the end of the reporting period for each class of the asset. So the asset classification is very, very important. It cannot be generalized in nature. The net carrying amount at the end of the period has to be recognized. Followed a reconciliation between total of future minimum lease payment and that of the reporting period and their present value. So this is also very, very important. Why? Because you have to understand the total of minimum future lease payment that's coming into picture. In addition, the entity shall also disclose the total minimum value of the future that is being told about and the payments at the end of the reporting period, followed by their present value for the each of the period. That also has to be recognized very, very clearly. So that is how this entire factor will come into picture. Followed by not later than 1 year. This is very, very important. Why? Because that will involve a lot of thought process in terms of what is going to happen, how it is going to happen. Now, we are also going to include this factor later than 1 year, but not later than 5 years. So one condition is that not later than 1 year. Other one is 1 to 5 years. So that is also going to be a thing. Later than 5 years. Now, the third condition is after 5 years also the disclosure that comes into picture, followed by contingent rents recognized as expense during that period. Any rental amount that has been paid out, that has been used, will also be recognized during that particular time period. The total of future minimum sublease payments, whatever is the total future value that has been used to receive under that factor, under the condition, very, very important, non-cancelable subleases at the end of the day, because that is where it matters a lot. Again, if you are cancelling, reusing it, remodifying the value, changing the present market value and other factors, then that is not going to be accepted at all. So all these factors have to be taken into account. With this, I come to the end of this particular session. I hope and believe that the session was of great interest and of a great use to you in terms of understanding the various factors of IFRS. In the next session, we will be speaking more about the different factors in terms of the impaired assets and in the different kinds of asset in IFRS. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.